That's how big they are. So think about that. 65% all health insurance goes through that company. Okay, that company has over 400 other organizations under their umbrella that they manage. And in 2022, that company decided to buy out 70% shares of our company, and we became their largest acquisition. And there's a couple of reasons why. One of them is we're the most ethnically diverse company in the whole nation. Okay, in the whole industry, our company is the most ethnically diverse. Matter of fact, we have the first female president in the industry. Okay, but the other thing is how fast we've been growing, and the reason that we've been growing that fast is because we're looking at the overlooked and underserved markets of America. That's our specific demographic. Okay, and that company partnered with us because of what we were doing in the market. And imagine that we're the new kids on the block, right? Like they've been around for years and years, and they already had 399 other companies under their umbrella. We're the new kid on the block, and they have already labeled us the #1 training company in America. We have the highest success rate of taking somebody who has no financial background and bringing them into this industry, training them up, and getting them paid. Amen? Can I get an amen? When you get paid. All right, so chaos creates opportunity. Let's jump on in. Chaos creates opportunity. Pandemic, market crash, debt increase, recessions, inflation. Does any of that create an opportunity? It does? Or maybe? What do y'all think?
Yeah.
Okay.
Yes, absolutely.
Why do you believe it? Why do you agree?
The market's there, that's all about.
Everything's on discount, right? Shoot, my wife will tell you right now, if it's on discount, it don't matter. But you didn't have to spend the money. I know, but it was on discount. Right? What else? You agree?
I do.
Okay.
For example, like cryptocurrency.
Okay.
Bitcoin, for example, we know how much one average Bitcoin goes. So knowing that when it goes down and crashes, it's easier to buy in and it will maintain its value or grow over time.
Sure. Anybody else? Pandemics, market crash, debt increase. Does any of this chaos create opportunity?
Yeah.
Okay, why?
I feel like every bullet that's up there creates some sort of supply and demand. Like for pandemic, it'll be a supply for masks, you need masks. Market crash, there's crashes, things are low, so you buy it. Yeah, I feel like everything has its supply and demand.
Absolutely.
So it is definitely a domino effect because market crashes create debt increase, which create recessions, which means they print more money, which produces inflations, which causes the property values to drop, which creates more market crashes and debt increases. But normal people are the only ones that feel inflation.
Right. So that's where I was gonna, right? Like, so when I say the word opportunity, some people will be like, no, well, I don't see no opportunity in that. But that's because it just depends on what side of the coin you're on, right? Like,
Yeah, somebody's eating off of that.
If you're on the bad side of the coin, it's not really an opportunity. It really sucks. But if you're on the right side of the coin, it's definitely an opportunity. And so we're going to have a conversation about that. But before I do, I want to talk about our leadership. So this is actually the guy who founded the company. He's an Army veteran, and he got into the industry in 2001. Imagine an Iranian refugee getting into the financial service industry when 9/11 just happened. Right? It was pretty tough for the guy, but he persevered. And then he eventually became one of the top sales guy in his company. He goes to the company and says, hey, I'd like to become partners in the company since I'm your #1 sales guy. And they said, F off. And he said, okay, thank you. That's all I needed to know. And he went and started his own company. When he started doing analysis, 2008, when the market crashed, the largest demographic were the black and brown communities of America. They're the ones that got hit the hardest when the 2008 market crash happened. Right? So what he did was, when he looked at that statistic, he said, okay, what do I got to do? So that's in 2009, he started People Helping People to address the overlooked and underserved, because what he found was those are the markets that they're overlooking on it intentionally, right? Keeping us ignorant about how money works. So he starts his company. Eventually he ends up starting a podcast where he was teaching, the mindset and the principles of leadership and sales and stuff like that. Well, eventually it blew up, and he turned around and he did another statistic, and he found that, and I don't know if you guys have ever heard this statistic, but you can go look this up. This is a fact. 90% of all media outlets are owned by one political party. They all root back to one political party. That's a problem. Because if 9 out of 10 things that you're listening to go back to one person, you might not be listening to the news, right? So what he did was he decided to start a company called Valuetainment, almost in the sense to combat fake news. And he said, we're gonna make sure that when you come on my podcast, we're gonna get to the bottom of it. And I don't give a dang if you're blue, red, or purple. When you get in my seat, it's a hot seat. So, for instance, anybody know DeSantis, Governor DeSantis? Does anybody know any rumors about Governor DeSantis? So the rumor is that he wears high heels in his boots.
In his boots?
Yeah, to perceive that he's taller than he is, because he's really like 5'2",
Like Napoleon?
but like a short man syndrome, right? But he intentionally wears these boots. I don't know if you ever heard that Kevin Hart. He's like, man, get knee extensions, but what about my arm? My arm just too small, right? But anyways, this idea that DeSantis out there is potentially wearing these specific boots that they got out of Italy, has high heels inside the boot to make them taller. And, you know, at the end of the podcast, Patrick McDavid goes, hey, DeSantis, here's the rumor. Is it true or not? And he goes, no, absolutely not. People are just going to say what they want. He said, man, I'm glad that you answered that for America. America, see? He said it. So this is what we did, DeSantis. We got you some boots so that you can put them on in front of America to show us that it's a rumor. And he walked out, and he's DeSantis, man, hey, you walking out, you're like proving everybody
Right.
correct. So he does stuff like that, right? If you get on his podcast or you get on this this interview platform, you don't get to come politically correct. So you're not getting a prescript of the questions and stuff so that you can go do your research and figure out how to answer it politically correct. You're gonna have to know your stuff. And so this is how he puts these politicians and stuff in the hot seat, the other business owners as well. Anyways, he's the guy who founded the company, but this is my mentor. So he's the #1 trainer in the company. He's made the most millionaires in the company. He's a Marine veteran out of Chicago. He ended up becoming the face of Chicago business. And he's like me, he's trying to compete with me. I have 8 kids, but he's trying to catch up, you know what I mean? No, I'm just kidding. But he's an author of multiple books. One of his recent books is called Keep the Keys. It's actually a bestseller right now. And the funny thing is, he's never been in the real estate world, but that's the #1 real estate book right now. It's Keep the Keys. And it's talking about how, because we had a conversation, and it's talking about how the #1 mistake that I see people make, because I'm from 18 years of real estate, the #1 mistake that I see people make when it comes to real estate is they're trying to pay a mortgage off. And I'm like, yo, you do not want to pay off your mortgage. Because if life throws you a curveball tomorrow, how are you gonna squeeze the dollar out of the bricks, right? The #1 mistake I see is they're trying to pay that house off. And then when you get into retirement and you're like 65 years old, 70 years old, you don't have a job, but life throws a curveball at you and now all of a sudden you have to come up with some money ASAP. The #1 thing that happens is they turn around and they sell it back to the bank, right? And once you sell it back to the bank will say, hey, I'll buy that house from you. Anybody know what that is? It's called a reverse mortgage. The bank will say, hey, I'll do a reverse mortgage. I'll pay you $2,000 a month for the next 30 years. But are you gonna live 30 years? Hypothetically, most likely, no. So this is where the bank wins. You have this paid off house, and if they only have to pay you for 5 years on a 30-year mortgage, they turn around and they win because they only gave you 5 years back of the 30 years that you put in, right? So the worst thing I ever see in real estate is people are trying to pay the mortgage off. And this is what you should do. If you want to know, I'm going to give you some tidbits of financial stuff throughout. Is every 3 to 5 years, we cash out refi and pull all the equity and we go buy another property, right? The reason that you want to do that is because money trapped in a brick does not do any good for you. And if you lose your job, you don't have a way to make income, whatever, it's hard for you to squeeze that lemon and get money out of that. Because you have to qualify for HELOCs. You have to qualify for cash out refis. You have to qualify for all that, or you got to sell the asset, right? So none of those are great options. And definitely a reverse mortgage is not a great option either. But that's what happens with most Americans, because we're not taught that M-O-R-T shares the same root word as mortal, mortuary, right? And so a mortgage means death pledge. Like you should want to die with that thing. You should want to die with this note in your hand. And then there's ways to have that paid off, but when you pass away. But you want to make sure that you're not having money trapped in a brick, And so what we do is every 3 to 5 years, we pull all that equity, we re-diversify. Anybody ever heard of DSCR loan? So it's called debt service credit ratio loan. You can use this to buy houses and you can use this to buy businesses. But if you have the down payment, you don't need credit and you don't need income. You only need down payment. So imagine that you knew somebody that had a very successful HVAC company like these guys need, right? Or you knew somebody with an electrical company or whatever it might be, right? And all you need is a down payment. And if you squeeze the lemon out of your mortgage and you could get that down payment, you can turn around and you can buy that business because it's an income producing business. And all you need is down payment. You don't need income and you don't need credit to qualify. Right? How many people do that? And so when I want to go buy a quadruplex, I see 4 doors. The reason that you can qualify for 4 doors, right? I mean, I tell everybody, whenever you write a real estate contract, it says 1 to 4 family. The same qualification to take to buy 1 door, it takes the same qualification to buy 4 doors. If y'all did not know that. That's why the contract says 1 to 4 family. So the same qualification to take to buy 1 door, you can buy 4 doors. Why wouldn't you buy 4? The problem is most of America doesn't understand the difference between good debt and bad debt. Good debt makes you money, bad debt takes your money. If you live in that house, that's a bad debt because it's taking your money. And so you think I have an asset. It's not an asset yet because you ain't putting it to work. It's only an asset when it makes you money. So if in the beginning, what I tell all of my real estate clients, very few ever listened, was your first 5 purchases should all be income producing property. They should be, quadruplexes and duplexes and things like that. Why? Because put that mortgage to work. For instance, if you have a VA home loan, you can buy a house every 6 months as long as that house is 30 miles from the other house. So buy a house over here, then buy a house over there, then buy a house over here. But you can buy one every 6 months if you got a VA home loan. 0 down. And once you tap out of your VA home loan and you still want 0 down, you could go to USDA loan. It's structured like a VA home loan, but
Just for regular people, right?
But for regular people, as long as you buy out in the country, right? So this is a way for you to build up a rental portfolio. And if you had 20 houses making you, $500, eventually you're gonna be making some good money, right? Here's another concept behind that. If I have $100,000, right, and I stick it in a 401k or an IRA that gets me 10% interest, because that's what the sales guy is going to tell me, right? What's 10% on 100,000? 10,000. Okay. If I take 100,000 and I go buy me a $500,000 home, and I'm only getting 4% on 500,000, how much is that?
20,000.
20,000. So wouldn't it have been better to take 100,000 and go put it to work on a better asset than putting in something that only grows at 10%? Like you think, oh man, that has a higher rate of return, it has 10%. Yeah, but even if the real estate on average only 5%, grew at 4 to 5%, yeah, but your rate of return is better because why? Higher purchase price.
Why don't real estate agents, when they sell more houses, if they explain this to people?
Most don't know what the heck they doing.
Oh, that makes sense.
So if y'all never heard this rule, it's called Pareto's rule. Pareto's rule it rules everything in the world. Okay, Pareto says 80% do 20% of the work, 20% do 80% of the work. So 80% of the restaurants only sell 20% to 20%. 20% of the restaurants sell to 80% of the people, right? So just think that number goes to everything. If you go to USAA right now, probably 20% are your hardest workers. The other 80%, they just clicking buttons, wasting time, right? So that's a problem technically to America because really we're paying too much to keep people employed for nothing because they ain't really bringing the value that they're supposed to bring. But anyways, let me go back to this guy because I thought I'd throw a little, wealth tip in there. Wealth tip. He also has a YouTube channel called 7 Figure Squad. Now, let me tell you this quick story about how I met this guy because this is God divine. And whether you believe in God, doesn't matter. I know God, so sorry that you don't believe him. But let me give you something. So in 2004, I gave my life to Christ, and I get in real estate, and eventually I started reading some books about financial strategies and things like that. I come across this book by a man named Doug Andrews, and I read this book, and I called Doug, and I said, Doug, you're making me interested in this industry. He said, Pat, I'm 70 years old. I'm not looking to bring anybody on, but where are you located? I said, I'm in Texas. He said, cool. I got a guy named Matt Sapala. He's in Dallas, Texas. Go find him. Click. I said, man, I know this man did not just hang up in my face on his phone, right? But 1 week later, I had a conversation with somebody on the phone, And I told him my 1-year goal was I had to find Master Paula ASAP. He said, how fast can you make it to Dallas? I said, shoot, I could be there tomorrow, what's up? And he got me to shake Master Paula's hand. And there's a whole divine moment in that. But that's how I got into this industry. And I realized, even though I had a great, successful real estate career, it's one thing for me to make money. But what I was realizing was, like, I had a client who literally bought a house. Her and her husband bought a house, and her husband dies on the way home from work. Now, he thought he had insurance because his work provides insurance. Here's what he didn't know. If your job provides insurance, that insurance is only active on the job. So when you're traveling home and when you're sitting at home, that insurance is not effective at all, right? And so he ends up dying on the way home from work. She calls me and she goes, Pat, I realized that the insurance that the job provided did not work, but I'm paying on mortgage insurance. And I said, ma'am, I think you misunderstand what mortgage insurance is for. She said, well, I know I'm paying like an extra $200, $300 a month for this policy, and it says insurance, mortgage insurance. I said, ma'am, that protects the bank in case something happens to you, so that the bank can get their mortgage paid off. She goes, well, what protects me? That was your responsibility. So we're gonna have that conversation, because it's crazy how they tell you, insure your car, insure your house, insure all these different things. They never tell you to insure these two things. They never tell you to insure your retirement, and they never tell you to insure your life. So, but pandemic. So one death is too many. Bubonic plague had 200 million. Spanish flu had 50 million. And COVID didn't even reach it, but when they were marketing like it was the worst thing ever, right? And they were firing people for not getting the shot. They were, propagating that if you didn't get the shot, you hated your brother and your sister. Like, it was a great divide in America during 2020.
Yeah,
Yes.
they even made, when I was playing college basketball, they told us that we had to get the shot or we couldn't play. So
Yeah, ain't
we all
that
had to
sad?
take it.
Ain't that sad? Because here's some statistics that came out from the CDC. Number one, this is from the CDC. By the way, go fact check this. But number one, if you got the COVID shot, you have a 4 times higher chance of dying. You have 400% higher chance of dying because you got the shot versus somebody who didn't get the shot. The other thing is, your average lifespan after you get the shot is up to 15 years. Ain't that crazy? Now here's another one. Because of the shot, many people were already passing away, and then they had life insurance. But here's what the life insurance companies were saying. Well, this was an experimental drug, and you're not supposed to take experimental drugs when you're insured. And they said, well, I was forced to. No, you wasn't forced to do anything. No, they told me I would lose my job. You probably should have lost your job and then turned around and sued them with a civil suit or something. But you definitely shouldn't have let them pressure you into doing that. And yet, most of America did.
And that's what happened with Kyrie Irving. He didn't take the shot, and he got everybody out on his case for it.
That's what I'm talking about. So, right? They were bashing everybody or making everybody feel a certain type of way about it. And yet, when you go to CDC, and here's what the insurance company, here's what the insurance company also said. The information's public. You could have easily went on the CDC and saw the real numbers instead of listening to the 90% of news outlets telling you the one lie.
Cause I was like, ain't no way they know the exact number. Like, that always kind of looked a little off to me when I was always watching the news. And my mom, I said, that can't be like.
So here's what happened though. So during that, they were telling everybody that if you bring your dollar into Starbucks and all these different things, that you were polluting your dollar, right? So because of that, what we need to do is, number one, we need to go to electronic. So please stop bringing dollars. Please just swipe, bring something that you can swipe so that you're not transmitting. The second thing is, we need to lower the staff. So go ahead and send most of your people home. So remember when I said Pareto's rule? 80% do 20% of the work, 20% do 80% of the work? How many people of America were sent home? Do you know the number?
80%.
Well, 70. Close to 80. 70% of the job market was considered non-essential and sent home. Now, was your bill still essential? Absolutely. So this is what happened. When you were sitting at home, they said, well, would you like us to send you a stimulus check? What did America say?
Yes.
Well, duh. Like, you want us to starve? So this is what they did. They turned on the printer, and 80% of all the money ever printed and put in circulation in America today was printed in 2020. Did y'all know that? Think about that. 80% of all the money ever printed and put in circulation in America was printed in 2020. And this president ain't doing no better. This mother lover. I feel like every 3 weeks he's printing money. And so, but this is a problem. Let me explain why. If I have this coffee, and normally, if you know me, I only drink black coffee, but for whatever reason, I had hair up I decided to get light coffee. Anyways, that being said, imagine that I have all black coffee, right? And I start filling this 80% of water. What do I do to my coffee? I dilute it. Okay. When they pour 80% of liquidity into the market, what do you think it does to your dollar? Dilutes it. Now watch this. Go to Google real quick. Pull out your phone. Go to Google. All of y'all can do it technically. Go to your phone. Pull out Google, and type in how much has my dollar devalued. How much has my dollar devalued since 1970? How much has my dollar devalued since 1970?
88%.
Huh?
88%.
88%. Say it loud and proud. Because we allowed it to happen. Okay, so do you know what that means? If your dollar's only worth about 12% of stated value, how much is a dollar? 12 cents. Now, okay, watch this. You go to your job and you ask your job, hey job, I'd like to get a little bit more money than $7.50 because it ain't working. So I'd like you to raise my pay up. He goes, well, how much would you like? And you go, I'd like $20. Right? Because you think $20 is a good number. But if $20 is only worth 12% of stated value, how much is $20? Do you know?
$2.40.
$2.40. So the reason that you feel the pinch and you're like, man, I'm working hard, I ain't getting nowhere. It's called the rat race, right? You feel like you've been running. I'm working hard. I ain't getting nowhere. You know why? Because every time they print money, your dollar devalues. And you're trying to trade time for dollars, and that's another big mistake. See, wealthy people don't trade time for dollars. Because if you go trade time for dollars, did you know that trading time for dollars is the highest taxable dollar? Did you know that? So there's 3 types of income. Technically, there's 4. There's earned income. That's where you're trading time for dollars. Trading time for dollars is the highest taxable income. And here's why. You're going to see it in the slide. But you're not keeping up with inflation. So you're probably going to need Social Security benefits and things like that when you get older. Here's another statistic. According to that, because I actually just posted a video yesterday. Somebody they were at the Senate or Congress, something like that. And one of the ladies was like, hold up, let me get this right. If you make less than $184,000, you pay up to 12% in Social Security tax? And they're like, yeah. But if you're a millionaire, how much do you pay? Oh, you pay like 2%. And if you're a billionaire, how much do you pay? You pay like 0.002%. And so that was the video. Here's what people don't understand. The reason that the millionaire and the billionaire does not have to pay 12%, do you know why? Because they won't need it. So when they don't need it, why do you have to pay into it?
Oh, the government knows if we
But if you
don't
have
to
a
take care
job
of you,
and you have wages, you earn wages, you're not going to keep up with inflation.
right? Okay.
So if you're earning wages, you're most likely going to need the government when you get ready to retire. So you're going to pay the biggest portion per dollar. Now, technically, if a millionaire is paying 2%, he's still paying more money. Let's be realistic.
Yeah.
If you guys don't realize it, the top
Yeah.
5% pay 80% of all the taxes. So regardless, top 5% of America still pays 80% of all the taxes by themselves. Because if I tax a millionaire or a billionaire, even if I tax that millionaire at 1%, he's paying more taxes than somebody at 50,000 at a 20% rate. It just, the numbers work out, right? Now, some people feel like, well, why should I have to pay taxes? You just don't understand the money game. See, the reason that you have to pay is because taxes are a penalty for not playing the money game correctly. So if I go borrow money, here goes the second and third types of income. Second type of income, portfolio income. Portfolio income is like when I go buy real estate. When I go borrow money and I put it to work. Portfolio income is taxed half of what earned income is. You know why? Because most likely if you build you a good portfolio over the next 10, 20 years, you won't need the system. So if you don't need the system and you won't lean on the system, is it good for the system? Absolutely. Right? So the goal is to teach you how to become independently financially secure. And when you don't want to become independently and financially secure, you're going to pay the most in taxes. That's how this system works. So I get that question all the time. Most people just don't know how it works. So they think the billionaire and the millionaire should pay all the taxes. Look, man, they are paying all the taxes. At the end of the day, if I employ 2,000 people, trust me, I pay tax on all 2,000 of those guys. I'm definitely paying more taxes than anybody out there, right? And so you just got to understand how money works. Now, the third type of income is called passive income. And passive income is like when you create books or you create, e-course, or you create certain things, subscription memberships, right? Like you open up a gym and it's just every month people are coming into your gym, boom, you're getting passive income, okay? That's also taxed at half of earned income. Did y'all know that? So portfolio and passive income are taxed at half the rate of earned income. Why? Because you're trying to build wealth. So because you're trying to build wealth, those penalties or that tax goes down. It's less. Does that make sense? Like when you do good, does your parents penalize you when you do good? No. When you do bad, your parents penalize you, right? Hey, boy, don't do that. Okay, that's what taxes is. Whoosh. Now you should have got tired of it. You should have got tired of getting that beating. No, I'm gonna learn my lesson. Now, here's the fourth income, and probably less than 3% of America knows how to get to the fourth income. And the fourth income is called phantom income. And phantom income is impossible to tax because it's phantom. Let me tell you an example of phantom income. Phantom income would be, I go to the bank and I borrow $1 million. And I take that $1 million and I go put it to work. I didn't earn it. I borrowed it. Is borrowed money taxable? No. Because I didn't trade time for dollars for it. So when I borrow $1 million and go put it to work, and let's say it gets me, 15%, I'm now making $150,000 a year salary. Does that make sense? So I created a salary by borrowing money, right? Okay, and it's not, and I don't pay no taxes because I ain't earned it. Okay, but if I go earn $1 million, how much do I lose? Oh, you're gonna lose about 40% because you went and tried to earn it. So your $1 million turned into $600,000. Does that make sense? So people are playing the money game, and that's what I realized. When I was in real estate, what I realized was there was two types of people. People who understood money and people who didn't understand money. And it just boiled down to those two things. Like when I would see a client buy a house, there was ways that one client was buying houses, and I'm like, yo, I did not know you could do that. So for instance, on 8242 Vicar Drive, it's right here. If you go right here on the other side of Walsham, down to Austin Highway, and you take a left on Austin Highway, there's a red light right there. You take a right there, and you go down Parambito. The first street where Renee Watson's office is with the small business center, you take a right there, that's called Vicar Drive. Matter of fact, the parole office is down at the end of that street. Okay, matter of fact, the Rock Church is on that street. Okay, right across from the Rock Church, there's a building. And in 2009, I helped a church buy that building, leveraging the death benefits of their life insurance contract. And I was like, yo, How the heck did you do that? Oh, you just got to understand money. Under UCC-3, you got to be able to create a debt note. Debt notes come through collateral. And then collateral something. I'm like, what? Yo, the market crashed I don't even know what you just said. Right? And so when I saw that, I realized, man, there's a group of people that are doing things. And I was blessed to be a part of the deal, but I didn't even know what I was watching. 2016, there was 10 guys that went and started a REIT, a real estate investment trust. I was a part of that deal. We met at Paisanos in 1604. I brought my attorney, and one of the guys to my left goes, all right, now that we got the trust structure, how do we get it funded? And the guy to my right, he goes, have you ever heard of Black Wall Street? He said, no. He said, well, if you go look this up, there was a group of people that based on their color of their skin, they were not allowed to buy houses, get mortgages, get loans, nor buy life insurance. So they went and started their own company, and they used trust structures, usually land trust structures, which is what you're doing today. You're creating a land trust, you're creating a REIT, a real estate investment trust. And he says, and if you guys all come together, there's 10 of y'all, and every single one of y'all buy a $1 million death benefit policy, you're sitting on $10 million in assets. Because life insurance is a tier 1 asset. It's better than gold and silver, because gold and silver goes like this. Life insurance, you can never take a loss. And so, if you ever go look this up, and if you take notes, collateral assignment is the word, collateral assignment. You can go into a bank and collateral some of your death benefits to a bank. And I would love to show you how to do it. But there's a way to go get money. And I helped in 2016, these 5 guys out of New Star, 5 guys out of Valero, create this REIT. They leveraged their death benefits of a life insurance contract to go get $5 million so they could go start real estate investing. And here's my thing. I'm born and raised in Mississippi. And Jackson, Mississippi used to be a Black Wall Street. Memphis, Tennessee used to be a Black Wall Street. Atlanta used to be a Black Wall Street. Matter of fact, there was a guy named Alonzo Hernan who was a barber. He became the first black millionaire in Atlanta because he started a company called Atlanta Life Insurance Company. When people were told that you couldn't get it because you said, cool, you don't want to give it to us, we'll go start our own company. And how did they start those insurance companies? If you go look, the first mutual insurance company, Google might lie, it's a little racist, but, because I actually looked this up, Google lied.
Yeah, ChatGPT does now too.
Google told me the first mutual insurance company was Mass Mutual. I said, you're a motherfucking lie. Because African Insurance Company came 30 years prior to Mass Mutual.
Probably still trying
And they
to tell
became,
you George
and what they
Washington,
were,
first president.
was they were the first mutual insurance company, because as you came together and everybody was paying their premiums into this pot, we support each other right here. So instead of spending $1, look, I love Martin Luther King, but one thing Martin Luther King did wrong was he told people, hey, let's try to get them in our seats and let's go get in their seats. And here's the problem. It took the dollar out of the community. Because when you let the white man bring I'm not racist, I mean, I'm half Korean and white, so, but it's just the facts. Is that, it's just the facts. I'm not racist, it just, if you want to call me racist, IST means you're proficient. So, I mean, because you can't be a dentist without being proficient, you know what I mean? You can't be a scientist. No, I'm just kidding, all right? But, like, if I go look at the Eastside right now, Eastside was started by Eastside Coalition. And it was a land trust. And everybody came together and they put money together to buy the streets and put businesses out there. And then gentrification came in. They said, oh, hey, we're integrating. Let me buy that house. Let me buy that gas station. Now, the first thing they focused on was buying all the commercial buildings. Let me buy the gas station. Let me buy the apartments. Let me buy the hotels. Why? Because then when those hardworking guys go out and serve the community, go make money, when they come back to their own community, we own the gas station now. So guess what happens to your dollar? It leaves the community. Black Wall Street was founded on the fact that you kept the dollar in the community, right? And so what we're doing is we're re-educating and bringing back the financial
So they bought all the commercial buildings and then leased them to other communities to run businesses out of them.
Absolutely.
So we taking your money and we gonna let them,
So that's
we
why
gonna help them take your money too.
Look,
and we gonna stand over here like, nah, it ain't us, bro. It's not us, it's them.
I didn't do it.
That's what they've been doing the whole time.
Look, gentrification is good
If you're on the right side of the game.
if you control it. So like for instance, I was just at Martin Luther King. I was on Martin Luther King. We was at this church. This is District 2. we were called out there to do it, to be on a podcast for District 2. And I said, look, this is cool. You got a bond right across the street. You got the Boys and Girls Club. Right next to the Boys and Girls Club is a bond for the Wheatley, I guess they're doing like an addition for the Wheatley Center or something like that. But they're building this park or whatever. And I said, the bond is cool. But here's the problem. Are the community members in that bond? Because if you're not, here's what's gonna happen. When that project gets done, guess what's gonna happen to taxes? They're gonna go up. Now, if taxes go up, but it was your money that went in and taxes go up, you raise more money, what happens to your money? It comes back to you in a greater way. But if you don't have your money in that and taxes go up, what are you doing? You're giving away more money. And so bonds are great. They gentrify the community. However, are you in the bond? That's what I talked about when I was on the District 2 podcast. Right? It's like, that's cool, I like this. But here's the problem, are we controlling what's going on in the community? Or are we letting somebody come in, build this out, build the bond? Look, I'm from Mississippi, and if you know anything about Mississippi, a lot of people went to Chicago. In Chicago, they were literally picketing that if you're gonna build a bond and do gentrification and do all this stuff in the community, you gotta hire somebody in the community. Because ain't no way you're gonna build this hospital and only white workers out here, right? You got to build with the people that are in here, because if not, then you're bringing all this, work, but ain't nobody in the community getting the jobs, and so all you're doing is taking the money out of our community as we're trying to build a community. That's a problem. This is the stuff that they're not teaching us anymore, right? So I'm bringing financial literacy to the most overlooked and underserved part of America, and I'm actually breaking down the financial game so that you really truly understand it. Because the other thing is, I hear a lot of people say Black Wall Street, but do you know how it actually worked? And do you know how Black Wall Street failed? Because Black Wall Street didn't fail because of Tulsa, Oklahoma. Black Wall Street failed because, like I said, we didn't own the land in perpetuity. Okay? When you don't own the land in perpetuity, there's a community called Arden, Delaware. If you ever want to go look this up, Arden, Delaware, Arden. Arden, Delaware, it is impossible to sell land out there because everything's on a 100-year land lease. So you can come in, bring money to the community, but money will never leave the community because everything's on a 100-year land lease through the trust that runs that stuff, right? So I just gave y'all the secret to the game, is that it's all about ownership and how you actually own it, right? This is also why you cannot rent life insurance. You have to own it, because that's what they did. They own the insurance company, okay? Now, talk about the pandemic, talk about how they printed all this money, debt increase. We're gonna skip some slides. But here, recession, look at this. If y'all don't know, the market is cyclical. Y'all know what that means? It goes in cycles. Okay, what happened in 1930? The Great Depression. What do you think's coming in 2030?
Another one?
They call it the greatest. They've already named it.
No.
And let me tell you why. Think about it. 2020, right here, if the Great Depression, if the market fell by 27%, COVID, April 20, it fell by 31%. But here's why you didn't feel it. 80% of all the money was printed. Okay, if 80% of all the money was printed, what is that going to do to your dollar? So there's a crash that's coming that people ain't even ready for. We're already seeing real estate. In real estate, the average foreclosure rate's about less than 9%. Okay? Over the last 2 years, it's at around 30%. So this year alone, I think it was 21%. Right? That's huge. There was more foreclosures in the first quarter of 2025 than all of 2008. Put that in perspective. If 2008 happened, and there's more foreclosures in the first quarter, what do you think's coming?
You said 31%?
30% over the last 2 years. So people like, here Rockefeller said, you have no time to earn money because you have no time to learn money. They keep us in a rat race, and so we don't have no time to earn money. We don't have time to learn money. We don't know how to watch the market. We don't know the secret strategies. We don't know all these different things, right? And so the average recession lasted 17 months. But look, cost of living from 1990 till, well, I put 2022, so it's an old slide. But since 2022, everything is up another 25%, okay? So if you add 25% to that number, to that number, to that number, everything's up around 400%, right? Cost of every consumer good that you need, gallon of gas, home price stuff. Look at this, median income in that same time frame, up 25%. So the reason that you pay the most in taxes if you have a job, a JOB, which means just over broke. If you have a just over broke, right? The reason you pay the most in taxes is because you didn't even keep up with inflation. So if you didn't even keep up with inflation, you're probably going to need my assistance when you get down the road. Because here's what you got to understand. If this happened over the last 30 years, right? And they printed 80% of the money in the last 6, what do you think is about to happen to these numbers? Do you think your JOB is going to turn around and pay you $75 an hour to push coffee? Because if you don't know the math, in order to have minimum wage today, based on the value of our dollar, you need to be earning $70 an hour. Did you know that?
Damn.
That's
Damn.
$70 an hour?
$70 an hour if you want to be earning minimum wage.
Barely.
So even if you're a registered nurse and stuff like that, and you're earning $35, it sounds good.
Sounds
Because you're
good.
making more money than the
All that's gonna
barista.
go up, so it's like,
But realistically, you're still not making enough money. Why do you think, even as a registered nurse, a lot of them are working 2 jobs? A lot of them are working 60, 80 hours. Because even at $35 an hour, still not enough. Right? Now, my biggest caveat to all that is, if the first job ain't working, why are you getting 2 of them? That never made sense to me. I gotta go get a second job. Why? The first one wasn't working. Why are you getting 2 of them? You gonna get 2 broke things? That's crazy to me. Which is why we teach, use your job, your wages to pay for your bills, but on the side, you need to be building your exit plan. You need to be building your legacy. You get it, right? You need to be building a hustle that will actually make you money, teach you skills. Because for instance, if you go do a side hustle as Uber, is Uber giving you a skill? No. And let's be realistic. Waymo and a couple others are about to beat them guys out, right? So, why now is the time? Macro forces. So 124 trillion with a T is about to transfer hands from the baby boomer generation to the next. But here's what you got to understand. You got to help. Let me tell you why. Everybody know Michael Jackson, right? Okay. Did y'all know that Michael Jackson's estate is still in probate? Did Michael Jackson make money?
Mm-hmm.
Was Michael Jackson able to pass that money on to his family?
No.
No. Anybody know Aretha Franklin? Did Aretha Franklin make some money? Did you know that her estate is still locked in probate? Was she able to pass that money on to her family? No. Y'all know Prince? Same thing. He made money, right? Was he able to pass that wealth on to his family? No. Here's the problem. Federal Reserve came out, if you want to take notes on this as well, Roadmap to Zero. Roadmap to Zero came out in 2017, and it used a Federal Reserve stat that said by 2053, black and brown median household would be at 0% wealth. Because they don't know how to pass wealth on. They know how to make money. They just don't know what to do when they got it. Like I saw a video the other day. This guy, forget his name. Dame knows him, but he was talking about why he only buys gold chains versus buying all the diamonds, right? And he was talking about because gold I can turn around, I can resell it, whatever, has a value to it. So I buy the least amount of diamonds as possible, right? Because he's in the hip hop world, so he's like, but I don't buy diamonds. Like everybody, why don't you have this bust down? Why'd you have this? I'm not trying to get that because the diamonds don't bring a rate of return. Only the gold. So I don't want diamonds. I want only the gold, right? And so he knows how money works. Most don't, right? And so the goal is, and now in that article, Roadmap to Zero, it says unless there is targeted intervention. That's what we are. We're the targeted intervention. So we're bringing financial literacy to the most overlooked and underserved part of America because most are not doing it, right? The Bible says, whether you believe it or not, the Bible says, my people perish where there's a lack of knowledge. And when Tulsa, Oklahoma happened, what America learned was, because at the time they didn't know how they were doing this. How the heck these people, 1865, slavery was abolished, and the next thing you know, they got Black Wall Streets all over America. How the heck did they do that? Nobody told them. They didn't even tell the secret. But when Tulsa, Oklahoma happened, and Tulsa said, hold up, America, you need to pay all these insurance policies. They're like, that's how they did it. So this is what we're going to do. We're going to regulate the insurance world. So the insurance industry became the most regulated industry in the world. And then they started regulating financial literacy. How to pay a mortgage, all this. And so now when you get information, for instance, it comes from Wall Street or a bank. Hey, make one extra payment a year. You can pay your mortgage off. Realistically, who wins in that situation? You win or the bank wins? The bank wins. Paying one extra payment a year does not benefit you. It benefits the bank because they get their debt paid off faster. But when life throws you a curveball or you get behind in taxes, can you lose that property even if you had that house completely paid off? 100%. So it doesn't benefit you to have a 100% paid off house, because if it threw you a curveball tomorrow and you couldn't get the dollar out of the brick, guess what? They still coming. So what we were never taught financial literacy. And so our goal is to help people understand how it works. There's $124 trillion about to exchange hands from the baby boomer generation down, but how many know how to do it? Here's one. 55% of business owners. 55%, 36.2 million. 55% of business owners are baby boomers. BlackRock and all these guys, State Street, they're ready. Sell us your business. You're tired. Sell us your business. Here's what you need to know. They can come with a fat check, but if they come with that fat check, let's say I'll give you $2 million. You got a business, I'll give you $2 million. You know how much you're going to lose in it? You're going to lose about $600,000 to $800,000 in taxes. So $2 million look good on paper, but when you have to pay $600,000 to $800,000 in taxes, is it good? Okay, there's a thing called an installment annuity sale, where you'll sell me that $2 million business over 4 to 5 years. And what we're doing is we're going to just take a portion every year, and it's going to lower your taxable penalty as much as possible. The second thing it's going to do is it's going to throw it into an annuity. And what an annuity does is it guarantees income for life. You have a floor, so you cannot go below. So if the market goes -10, don't worry, you stay at 0. 0 is your hero. But here's what it also does. It gets you 7.25% guaranteed. So one of the biggest things that are going on right now is that we're educating baby boomers how to get your retirement out of 401ks and IRAs. They're good. They're decent. They gave you wealth over time. But now you need to figure out how to protect it from sequence of return risk and longevity risk, and that's where annuities come in. We can take that 1035 exchange and move it into a product that guarantees you a great rate, gives you income for life, and lowers your taxable penalty, right? So,
Real quick question, Pat.
Yep.
Is that why business owners, when they structure like a merger acquisition, when somebody's buying their company, while they'll like structure it for over a 5-year period?
Yeah, that's what IMG did with PHP.
So that
IMG,
we stay there and build the company, but really it's more so that you can give me the money the right way so I can avoid taxes?
It's twofold. So one is, the biggest one is taxes. Yes. But the second part is, 9 times out of 10 when you hand a business off, if you just hand the business off, there's going to be a disgruntled group. They're going to feel like, man, I can't believe you just abandoned ship. So instead of abandoning a ship, what you're doing is you're helping like everybody understand the new culture, and you're kind of like giving a warm handoff, and you're training the new people how to do it your way. For instance, let me make an example. Again, Chicago, there's a big company called Portillo's. Portillo's is an amazing
Oh
freaking.
yeah, I heard. My cousin's obsessed with that in Chicago.
Yeah, so in Chicago it's a big thing, right? And
Yeah.
every time I
That
came
one
off
35 now.
the, every time I came off the airplane in Chicago, every time,
Oh,
not
yeah.
Miami is a
Not
time.
really.
I came off the airplane, I went straight to Portillo's, right across the street from the airport.
Wait, that's
Get-
better than Harold's?
Yes.
Yeah.
Yes,
Portillo's
bro.
there.
Yeah.
But
Don't
you
even
get
mention them,
get
bro.
the
What are
two
you
meat,
doing?
It's fine.
double dipped with the cheese fries. I mean, you know, what I mean, you can't go wrong. But anyways, when I went to this one that, so the guy died. The guy that owned Portillo's, for the longest time, Portillo's was a family-owned business. Like you could not, they did not want to sell outside of Chicago.
Wait,
They
you
wanted to
talking
keep it
hot dog
going. Yeah.
Yep.
Well, it's more.
Oh,
Man, see,
okay.
that's how you know you
Yeah,
don't
but
know.
they do the
anything.
Italian
They
beef
ain't
though
no-
too. That's what we're talking
it's
about.
not-
Italian beef.
It started off in the hot
yeah.
dog
I know
business.
what you're talking about.
Way different thing. But anyways, Portillo did not want to water down his company. He was a very successful company in Chicago, but he didn't want to water down his business, so he never sold. When it was when he passed away and his grandkids inherited this business, they didn't know how to run Portillo's, so they finally did sell. And when they sold, that group had to come in and learn exactly how Portillo's, from even the call out, like when you're at the window, you know, number 6, come get you. You know what I mean? Like they have a way of saying what they
Culture.
say. Yeah, the culture. So they had to learn all that in order to take over Portillo's. So that's part of why, because you're not gonna learn it all in 30-day closing.
Well, it's funny you brought them up because my mom is from Chicago, and I remember I must have been like, we were in Florida, so it was like 04, 05, and they just started to ship outside of Chicago. Like
Yeah,
they
you
would
can put it in
ship
there, yeah.
in a styrofoam, dry iced, and
Yeah.
she was crazy excited, just waiting, checking the phone, like
Bro.
when is it coming? When is it
My
coming?
wife is from Chicago, and
And
would
then
get
she
that
would
stuff.
not
I'm like,
share.
bro, this ain't that serious, man.
Yeah, no, she would not share. It was a
You
fight
gotta
now.
get it from Chicago, man.
Mhm.
That's in Chicago. Anyways, let's talk about who we are. Started in 2009 with 66 agents. Today we're over 27,000 agents in 49 states, 170 offices. And our vision is to have 500,000 life insurance agents in the industry. We want to take over the industry. But what we really want to do is disrupt and diversify. Because the average agent in the industry right now is what they call stale, pale, and male. Y'all know what that means? 60-year-old white men. Right? And so you think those 60-year-old white men coming in everybody's community teaching about money? No. Again, no offense to them. But what our goal is to diversify the industry. Okay? It's not very diverse. Okay? Now, that being said, our mission, saving America through free enterprise. So we're giving you an opportunity to come into the industry. You know, be a new Alonzo Herman. Be a new John Merritt. Be a new Madam C.J. Walker. Be a new, right, Booker T. Washington. Booker T. Washington started an insurance company. Okay? And so the goal is to get people in the industry. Here's a crazy fact. Y'all want to know a crazy fact? 1908, we had 96 black-owned insurance companies. How many do you think we have today?
Lower.
One is like half owned.
Yeah, 0.5%. We got one left and it's half owned, 55% owned. Right? How did we go from having 96 to having less than one? Okay? It's a problem. So, we don't, and here's the other thing. You know, most people, when they think about how to get out of the neighborhood, how to get out of my circumstances, a lot of it is around athletics and stuff like that, or athletics, music, things of that nature. Now, a good thing is we're having an uprising of doctors and attorneys. That's good. We're having an uprising of that. But here's what most people are forgetting. Again, you can go earn money as a doctor. You can go earn money as an attorney, but do you know what to do with the money? So we need more people to join into the financial industry and to learn it. So we're bringing hope to the overlooked and underserved communities of America because they need it the most. Let's get this thing to work. I told you guys I'm from the real estate world, right? And look at this. In 1970, in the insurance industry, there was 5,000 agents serving a population of 204 million. You fast forward to today, there's less than 500,000, but the population is almost double. Ain't that crazy? But when I look at the industry with the real estate, there's 1.45 million. 1.6 million real estate licensees let their license go in 2025. Ain't that crazy? Redfin put out an article and said 71% of licensed real estate agents in America didn't sell one house in 2025. So 1.6 let their license go. So I feel sad because I see some people, as a matter of fact, I just had a conversation with a guy, he's like, man, I'm getting my real estate license. I'm like, bro, you're like me. you didn't know no better. Good luck. Right, but why get into an industry that's actually declining? They lost 1.6 million when you can get an industry where we don't have enough already. Chaos creates opportunity, right? If there's 342 million Americans, but there's less than 500,000, look at this. Who has to compete more? 1.5 million in your market or only 500,000? Right? They have to compete more. It's easier for you to find clients if you get into the financial game. Why? Because we don't got enough people. And then you got to take in Pareto's rule, right? You got to take in Pareto's rule. Only 20% know what they're doing. So if only 100,000 agents in the industry know what they're doing, do you think they're able to find you easily and tell you what to do with your money? No. This is why there's an opportunity, right? So I hope that I'm hitting that home. There's an opportunity in this industry, and when I say you go on Google, type in industry most likely to make a millionaire, this is it. So diversity, equity, and inclusion, again, 90% of our agents have no previous industry experience, 53% are women, 42% Hispanic, 32% African American, 1,200 agents have served in the military. If you're Anglo, I'm half Anglo and Asian, so I'm a double minority in the business. But we have the first female president. That's her right here. First female president in the industry. In the whole industry, first female president is the president of our company. Right? And so we lead in fintech, what they call financial tech. Right? You can run this business anywhere. When I was in real estate, yes, I could try to sell houses all over Texas. I could give referrals outside of Texas. But I was also bound to Texas, right? So I had to show you a house, I had to drive around, I had to spend gas. Might take me 45 days to find the right house, right? There's a lot of work going into to doing that. And then 30 days to closing. So, 60 to 90 day closing cycle in real estate. In this industry, we get paid 2 times a week. Every Tuesday, every Friday. And depends on what it is. I mean, some of them pay pretty fast. Some of them take a little bit longer. Pack Life takes a little bit longer, but they pay bigger. And then Mutual of Omaha pay the fastest. Right, so you do a policy on Tuesday, by Friday you get paid on that policy. There's not a long life cycle, and it pays like I'm in real estate. So watch this. If you pull your calculator out on your phone, I'm going to show you something, and then we're wrapping up. So go to your calculator. Everybody has your calculator? Now watch this. So I'm going to give you a number. Don't put this number in there yet, but I'm going to give you a number. The average American is saving $500 in a 401k. Okay? That's the average American. What I'm going to tell you is, what if you could show somebody how to save $300? So put $300 into your calculator. Now, the carriers pay us 12 months in advance. So you multiply by 12. That's the commission. It's a pretty good commission trying to show somebody how to save $300. Right? Now, if you're a 50-50 split agent, because maybe you're still going through training and you only make $1,800, is that still pretty good money? Making $1,800 trying to show somebody how to save $300? Yeah. That's how powerful this industry is. I'm not trying to brag when I say this because I'm not that type of guy, but I want to let y'all know, I did 3 policies, but I'm in the business field, so I deal with a lot of business owners, okay? And I just helped 3 people, only 3, and I'm making over $42,000 on those 3 clients. All right? Damn. And I did that from my house.
Within what time period?
It took me 2 hours.
Also, it's all one single. Okay.
Yeah, so I did, well, it was 2 hours per client. So it was about 6 hours. But I met, and all of these, 2 of them came from TikTok. So I didn't even know them. They live in Alabama. Never even met them. I only met them on Zoom. They jumped on a Zoom. I sent them a video of how it works. I said, watch this video before you get on the call with me. It was an hour-long video, and it kind of describes how the product could work, right? It talks about how it could be a retirement strategy. It talks about how it could become your own bank, all these different things. So when you get on a call with me, I've kind of already gave you some basics, so that when you get on a call with me, like, we can go straight into like, what do you need to accomplish? Because I'm not a McDonald's worker, so you don't just pull up to the window and say, hey, I'd like a $200 policy, and right? Those are poor life insurance agents, okay? What I do is I'm finding out what your goal is and what the purpose is, because this is a Swiss Army knife. So depending on what you need, then we're structured for that, right? So for instance, there's a thing called a rich man's Roth. A rich man's Roth is, instead of putting money in a Roth, which has contribution limitations, income limitations, and access restrictions, you could actually throw it into a life insurance policy and have none of those restrictions, right? And so you can stick $20, $30, $40, $50,000 in it. Well, that's what this one of the guys, he ended up saying, hey, look, that 401k, I don't believe in it. I don't trust it. I've watched the market go like this. I'm watching the market go like this. I don't know if I want a 401k. Are there any alternatives? So I said, watch this video before you get on the call with me. He watched the video, and what I showed him was a life insurance policy invests in the S&P 500 or the Barclays, Credit Suisse, Ravenpacks, whatever you want, but has no risk. The reason it has no risk is if you'll go look at every insurance company across America, specifically the top 10, they are the ones who set up your bonds. So every municipal bond and stuff like that, when a city needs money, who's the most liquid person on the earth? An insurance company that has, 10 million people bringing $100 a month. You know what I mean? So what they do is they redistribute that money in the form of a bond first. AAA rated bonds, they're the most secured bonds. They're given on an average of 5 to 7%. So, and they're the most safest way to invest. Now, they take that and the cream on top, they turn around and they invest it in the S&P 500, the Barclays, Credit Suisse, Ravenpacks, QQQs, all these different things, right? BlackRock, whatever you want. You get to go in and actually choose. So imagine being able to do exactly what your 401k does, where you could pick, I want to invest in QQQ, I want to invest in US pay centers, and then I want to diversify a little bit in the S&P 500. And you could go into your life insurance policy and do that, but because there's a rule that says if you attach your death benefit to your retirement account, you no longer can take a loss in that retirement account. So when the market goes negative 36 like it did in 2000, 2001, 2002, it was a total of negative 46% over 3 years. In your life insurance, you stayed at zero. Zero is your hero. As soon as the market started bouncing back, you started capturing all the gains. You captured 60 to 80% of the gains. So imagine capturing 60 to 80% of any market gains, but never, ever, ever taking a loss.
So it's like the high reward minus the risk.
Correct. Now that being said, here's the problem. Most people don't know this, because there's more financial advisors going out there telling you about 401ks and IRAs, and realistically, it's not even them. It's the HR lady at your job that don't even know how it works, but she just told you, hey, they told me to get you signed up for this. And so out of ignorance of knowing how money works, we're like, cool, right? And so we did it. And you didn't even go check other options, right? So, but that's also because there's not enough of us to go out there and explain it. And just like I said, Pareto's rule. If only about 100,000 actually know what they're doing, you think that 100,000 people are going to talk to 342 million Americans and tell you how to build? No. So when he got on a call with me, I said, what's your goal? He said, I want to retire in 10 years. I said, it's a very large goal. You're only 28 years old. He said, yeah, max at 45. I said, let's do 40. And 45, I'll show you some options. Anyways, he had to save $3,000 a month. Well, if you take that math, 3,000 times 12 is a $36,000 check. I get 75% of that check. And I did it from my house. And I could have done that while I was on vacation. That's how powerful this business is. Here's the best part. That guy's in a whole nother city and state. So imagine building a business where you could talk to people all over America. And if you're anything like myself, because not everybody is, where you've been to Chicago, where you've been to Mississippi, where you've been to Florida, and you got relationships all over, guess what? You can make money all over America. Versus if I have a business, right? Like if I own this specific coffee shop, where do I make money? right here. Versus I make money all over.
You don't need to have a life insurance. You get some life insurance in different states.
Yes. So once you get a license in one state, you can just apply for a non-residence license in another state. So it's cheap. This is the cheapest industry. Because when I got into real estate, how much do you think it costs to get in real estate? Thousands. You know how much it costs to stay in real estate? It costs uber thousands. No less than $15,000 a year you're paying to stay in real estate. Whether you sell or don't sell. This is why 1.6 let their license go. Okay? But in this industry, for less than $300, you can get a license. If you don't sell, this is on you. You didn't want to make no money. You go help your friends and your family, you can make money right there. And then you can learn the rest of the skills of how to network and how to build a business. For myself, who spent over 18 plus years in business. That's what I do. So what I do specifically is I coach you, and it's a free coach. You know why it's a free coach? Because if I help make you money, we split that commission. Until you come out of my training program, and then you kind of kick me out of your pocket. But what I get paid to do is help make a licensed agent. And if I don't make a licensed agent, I don't make no money. So it's a way for me, but this industry is no different than real estate. When I was in real estate, if I had a real estate brokerage and sold real estate by myself, do you think I could have sold 650 homes a year? Absolutely not. But could I do it with a team?
Yes.
Absolutely. So if I owned Starbucks, could I sell coffee all by myself to thousands of people a day? No. But if I go build a business, could I do it? Yes. So what I'm doing is I'm showing you how to get your license and eventually go build a business. Right? This is why somebody invited you in this room, because maybe they want to build a business too. Right? And this is a licensed industry. We ain't selling lotions and potions, schemes and dreams. Like, this is a licensed industry. It's a 2,000-year-old product. It's the most regulated industry in the world. You actually have to get your fingerprints in order to be in this business. Yeah. So it's a regulated industry. Right? Now, let's go back to the calculator real quick. So you did 300 times 12, right? Let me show you. I'm going to finish showing you the commission structure. So you did 300 times 12. Showed you it was $3,600, right? Now, let's imagine out of 365 days, you only work a quarter. So multiply by 100. And then, let's say out of that 100, you're going to work for 10 years. I had a lady one time say, Pat, I don't even have a retirement. I said, that sounds like you need to join me in business. Because this is a way to create retirement. Because what I'm about to show you is how to create passive income. Y'all remember earlier I talked about passive income? So we're earned income while we're out helping. But we're also earning passive income. So watch this. So multiply by 100, then multiply by 10. It should say 3 million. Right? Now multiply by 0.05.
Man, 3 million.
3.6 million.
It should be 3.6 million.
Oh, yeah.
And then multiply by 0.05. What does it say?
1.8 million.
180,000. You know what that signifies? That's your yearly passive income for the next 20 years for your first 10 years of work. It's called passive income. You don't have to work for it. You already work for it.
ED at the end. I already worked for it.
That's right. That's how powerful this industry is. I did over 17 years, 18 years in real estate. I ain't got no passive income except for the portfolio that I built. That's not for real estate. In this industry, as I go help more people, as I go train more agents, I'm building passive income. And I'm showing others how to do the same. And like I said, I had a lady that didn't have a retirement strategy. I said, well, it sounds like this would be perfect for you because you could build a retirement. Here's what's crazy about that number too. Because I'm kind of a jokester, if you haven't noticed. And so one of the guys, when he showed me that, Matt, I said, yeah, but what happens if I die at year 11? I thought it was a good question. He said, Pat, we're in the life insurance industry. That paycheck would go to your family for the next 20 years. I said, hold up. Come again? You're telling me if I work 10 years in this industry and I help that many people a year for 10 years, I build that passive income and I die on year 11, that check will go to my kids for the next 20 years? They said, absolutely. Why would we tell you to go sell life insurance and you not help, we not turn around and take care of your family? That's actually what sold me. I literally left a real estate career where I was making good money selling houses, and I said, you know what? Where impact is I could bring financial literacy and bring impact to the community and disrupt that Federal Reserve statistic and turn around and still make a whole lot of money. Say less. And it cost me less than $300 to get a license, right? So I just showed you that. Again, I just explained less than $300. That's what this is. It pays for your enrollment fees. Nothing comes to us. I had a guy one time say, man, it sounds like a pyramid. You don't know what a pyramid is. A pyramid is illegal.
Like a pyramid scheme?
Yeah, it's illegal, first of all. This is the most regulated industry in the world. You can't even do it. But when I ask people, is real estate a pyramid?
No.
They go, no. Well, this is just like real estate. Because if I have a broker, I have a team lead, and I have a team agent, what's the difference? They're all splitting that commission. If team agent goes and sells a $300,000 house and brings home $9,000 commission, doesn't everybody get a piece of that commission? Yes. And the broker's the one training him, right? Okay, I'm the broker of this company. And I'm training you, and did you have to get a license in real estate? Yes. Do you have to get a license over here? Yes. Do you have to get a license to be in a pyramid? No. Because you're selling lotions and potions.
That was just like when I was doing Amway. You ever heard of Amway
Uh-huh.
back then?
Uh-huh.
I was doing them, but like I don't know, it was off. And I would just have.
I know. Do you think somebody needs Cutco knives and makeup, or do you think somebody needs to learn how to build a retirement strategy?
Build a retirement
Okay,
strategy.
that's why this is a totally different. This is nothing like those guys. But again, when you don't understand business, you'll associate things that look similar but are not. Because my thing is, if you don't like pyramids, then why do you stay at that job? Because at a job, the biggest part of the employment is who? The employees.
Base.
And then the managers and the supervisors and then the CEO. That's a pyramid. And you sign up for that bull crap. Why not flip that upside down and take all control of your money? Look, watch this. I got into this industry, and in my first month, because I went out there and grind, and I wanted to build. I went from a 30% commission to a 60% commission in my first month. Would I ever be able to do that at a job? No. But I take control of my business, right? So my goal is to show you how to do the same. How to go out there and build a business, and how do you do it? You go out there and you be impactful. That's why I named the team Impact Society. When you go out there and actually care about people and help people and chaos, because there's a lot of chaos in the world, right? With taxes, with inflation, with all these different things, and we see that chaos. I see opportunity to go out there and bring financial literacy and help people better their financial situation. As we do so, we make a lot of money doing it. Now, it's not about the money. It's about the impact. But the money sure does look good when it's sitting in the bank, you know what I mean? So, I can show you for days all the people that have made money. I can talk about them. This guy's sitting at 3 million. This guy's sitting at 1 million. But the real question is, do dreams really come true? Here's the problem that most of America has. Kind of lost dreaming. We think we think we're logical. You know what you really did? You allowed your brain to convince you to settle, and you thought you were being logical. What you really have to do is your most God-given gift is 2 things. Number 1, imagination. To be able to think beyond your physical world, and to believe that you can take nothing and create something. The second one is being able to speak it into existence and make it happen by deciding and you believe in your heart and you confess with your mouth. So there's nothing on the inside that you can't talk about. So if you lost hope, guess what? How your speech comes out? Hopeless. But when you are hope-filled, guess how your speech comes out? Hope-filled, right? So this ain't the gospel, but I call it a gospel because we're healing the sick, we're opening blind eyes, we're helping people, we're raising the dead, right? And we're doing a good thing. Here's the thing: there's 3 ways you can walk out of this room. One way is, Pat, I want to learn how to be better financially. Cool. I'd love to sit down with you, have a conversation with whoever brought you here, right? And let them know that how you want to get help, right? Matter of fact, if you can, take one down, pass it around. This ain't a doobie, but and if you need a pen, just let me know. But you can say, hey Pat, I want to become a client. I want to learn about money, right? I thought I knew about money, but I realized, shoot, I know a little bit about money. And so, and here's the thing, I'm a firm believer that you can always learn. I mean, my coaches are millionaires and billionaires, and they have coaches, right? So you don't know what you don't know. Anybody that has too much pride to learn, you already stopped growing. So pride is how Lucifer fell out of heaven. Do not have pride.
Pride coming before the fall.
That's right. So be willing to be, at least see. Let me see how this could work for me. The second option is, let me join. I want to join the movement. Because here's the worst case scenario in this situation. Worst case scenario, you learn about money. You got paid. You got to earn while you learn, right? So you got to learn about money, but you got paid to learn about money. What a beautiful concept. The third one is, let's do both. I want to earn while I learn, but I also want to get my money in order. Let's do both. All you got to do is fill that out. If you need a pen, let me know. And then after this, whoever invited you, just let them know. I apologize about the heat. I try to go as fast as possible. We actually hit it right on time. But I appreciate you guys for coming out. I want to thank you. You could have been anywhere on Tuesday night. You here with me. I'm sorry you had to look at my face all night, but but yeah, y'all let whoever invited you know how you want to move forward. Cool? Appreciate you guys.
Thank you.
I got one question.
Yes, sir.
I've been in real estate, and if I'm not mistaken, if whoever pays the property taxes is really going to own the land, if I'm not mistaken, correct?
No. Taxes are a penalty. Is the city paying the taxes? No, but can the city come in and